everyone. Today I want to show small businesses a different way of setting up their payroll in Excel that might be more beneficial for them. If you're using Excel for payroll and you're using this setup, this type of setup, but you're not really satisfied because you can only see the payroll data for a single pay cycle in one tab. What if you need to see multiple pay cycles for a single employee? So you would have to, if you're using this setup, you would have to split between the tabs to see what was going on with the employee. So this employee right here was paid in this cycle, but they were not paid in this cycle, and you want to know when was the last time they were paid. So if you use this setup, you would have to keep clicking in all the tabs until you found the information that you were looking for. Or if you needed multiple data on multiple pay cycles, you have to flip between the tabs. So this setup may not be beneficial for someone who's constantly needing to do things of that nature. Well, I'm going to show you how you can set up a grid in Excel where you can review each employee's entire payroll runs in a single tab. So that's a single tab for each employee where you'll see all their payroll runs. And I'm also going to show you how you can set up a tab where we'll collect all the tax data here for your quarterly deposits and filings. Most small businesses file quarterly. I know some file monthly. I won't get into monthly today, but you can also use the grid to file monthly to collect the data in the grid and file monthly deposits. But you can use the same grid, it's just a few more additional lines added. And because each tab contains data for a single employee, you can even print that tab and hand it out as a pay stub. I know some states require you to hand out a physical pay stub. Some small businesses don't have access to online portals or things in the cloud where employees can download their pay stub. So this is a great way to solve that issue. And with this grid, you don't need to know any fancy Excel formulas. I'll be using the very simple formulas that are used in Excel, nothing fancy. I'll show you the simple way of using the formula, and if you prefer to use a more complicated formula, please do so. But before we get started, I really appreciate if you would hit the like button and subscribe to support my channel. Thank you. So let's get started. So here's the grid that I created, and I preset it up to save some time so we can just review the areas that you will be inputting. So the first column is the actual pay date. This is a bi-weekly payroll cycle that I set up. I did it as bi-weekly because most people are paid bi-weekly. You can use it as weekly, monthly, it doesn't matter. It all works for any pay cycle. You can even just put in whatever pay date you want if you just run your payroll willy-nilly. If you want to have your payroll periods in there, you just add the columns and put your payroll periods in there if you choose to have that data added. So the pay date, you put in the first pay date of the year, and then you just put in a formula of how many days they're in your pay cycle, and it'll automatically calculate the next pay date. As you can see here, here's the formula. So it's just the first date you put in, and then you add 14 days onto that cell. But because you have the quarterly summary line here, you wouldn't be able to just copy down the formula. You'd have to start all over and add the data and copy your formula down. So here, instead of it adding the cell above, it's going to add the cell above that. So line 11 here is going to add from line 9, and then you can copy your formula down, but you have to remember to fix your formula so it's adding 14 days to the column above it. Great. And now the next two columns are the employee's rate. So it'll be their regular rate, and then there's a column for their overtime rate. If the employee is salaried, you can still use the grid. Here's an example of a person that's salaried. You're just not going to use the overtime rate column. You'll just be putting in their standard bi-weekly rate. I'll get to that in a minute. So on this grid, everything that's shaded is the columns, or are the columns that you would enter data. All the ones you see with the dashes are formulas. They're prefix formulas. For safety purposes, I like to lock my cells so you won't accidentally type any data in there. That's optional. But if you accidentally type something in there, you can always just copy the formula from another cell right back into that cell. So for this purposes, we'll go ahead and put in a $15 hourly rate for Barbara. And the formula here automatically calculates her overtime rate, which is a simple formula. It's just $15, which is in B4, plus half of $15, which is in B4. So it's a really simple formula. So you can put, and I'll type it in so you can see how you do it. So you just do plus this again divided by 2. That's it. Once you have it in there, you can just copy your formula down. If you have other rates that a person is working 2 different jobs, you can just either add another column and add that rate in there. If you want to do it that way, that's actually a simple way to do it. You'll just add another column and you would put that pay date and you would have that second rate. You just have to be sure to make sure you put in your hours in the correct corresponding column. So the next 2 columns are the hours that the employee is working. So let's say this person worked 80 hours. You can put in 80 hours and it'll automatically calculate their regular pay. We'll get to that. But let's say you have categories that are more than just regular. You might want to put in retro and have a column for that, and then you would put a formula in that would correspond and that will multiply by the rate. But since you're a small business, you don't want to complicate things. So it's usually wise to just go ahead and add the hours on and put a note. So it's 82 hours, and you just put a note in the comments in 2 hours of the 80 hours is retro hours. That's usually a simple way to do it. But you always can just expand every column to include whatever is specific to your company. And now let's say the person worked 1.75 hours of overtime. So this is the gray area. Remember, you're just adding data in the gray area. So here's the formula. It's a very basic formula. We all know this formula of calculating hourly rate times the hours. So it's just the basic hourly rate times the amount of hours that the person worked. And it includes 2 hours at regular. So we put it in the hour column. Let's say it was retro overtime, then you would put the 2 hours in this column and it would calculate. And you would get this amount, which is the basic formula of the amount of hours the person worked times the overtime rate. C4 times E4. And then we'll have the total gross. But again, if you have multiple earning types that needs to be multiplied by the rate, you can just go ahead and add those columns in here, whatever you want it to be. Whatever, it could be miscellaneous, it could be retro, it just doesn't matter. It could be a flat amount of $100. You don't want to give it a name or whatever. Just remember to update your formula when you do that. So your formula would update, and that's what it would be. But for the purpose here, we're not going to do that. So we're going to delete that column and just have this times that, this plus this, and you have your gross. Some small businesses may have a cafeteria plan and medical benefits. They may offer medical benefits, and these are tax-free benefits. So this column are deductions for anything that's tax-free. If you don't want it to be a single column, you can make it multiple columns. So if the person has medical coming out, dental coming out, and vision or something like that, if you want to have 3 separate columns because you need to know what's medical, what's dental, then you would just expand it and have a column for each. To keep it simple, I would just add the deductions together. Let's say it's $100 for medical, then you'll add, let's say the person has vision, $4.15 for vision. But remember, you can expand all these columns to include whatever amount, whatever you need itemized. And the second column is the taxable income, because this is the amount that's going to be taxed minus any tax-free deductions that the person may have. This column is strictly for cafeteria plan deductions because retirement plan deductions are treated differently. So if you have a retirement plan, you'll have to create an additional column here to tax it differently. And then your formula will be different here because retirement plans are taxed for Social Security, and Medicare, as opposed to cafeteria plans, are not taxed for Social Security and Medicare. So now we have our person's taxable income in this column, and the taxable income is a basic formula is H4, which is the gross, minus the tax-free deductions, which is I4. So it's just H4 minus I4, which is gross minus your tax-free deductions. And if you have other deductions that aren't tax-free, or you remember, you just put a space here, and you'll create an amount here, and you'll call it whatever you want to call it, but you'll either have to plus or minus it out of it to make it a taxable or a non-taxable deduction. But this is small businesses. They don't really usually get as complicated as that. This is something that's usually for larger corporations. Now that we have our taxable income, you have Social Security tax that's going to come out. Social Security tax is 6.2% of a person's taxable income. So it's a basic formula. It's just J4, which is the taxable income, times the Social Security rate, which is 6.2%, but when you multiply it, you put it in the fraction that you're supposed to have it in. Same with Medicare. Medicare tax is the taxable income times the 1.45%. That's Medicare tax. Federal tax, this is the option of every employer does it differently. When you're a small employer, you can either just put a standard rate. Here I put 10%. In one of my previous videos, I showed you how to calculate taxes. The true way of calculating taxes out of a person's pay stub, out of a person's paycheck. And you can enter it here and calculate it what it's supposed to be. That's for a state. And for federal, you can post it here. These are the real tax grids for calculating pay in a payroll software. They're literally entered in that way. But for the purpose of here, we're just going to go ahead and do a flat 10% for the federal and a flat 5% for the state. Here's your column for your total taxes. That's just the simple formula of just summing up your total taxes. If you have a local tax, you'll just slip in a column here and add local. However many states, however many locals, it doesn't matter. You can just drop them all in, and then you would just total them in. I found it easier in setting up the grid when you have totals. So you have a total, It's just easier, a total, than to try and put in these complicated long strings of formulas that's trying to say add this, add that. So if you just have totals, the formulas work out better and easier to manage. And here's another gray area, which means this is something you can fill in. Employees are always owing money to employees for whatever reason, and it's not taxable, it's not reportable to the government. Employee could have drove somewhere and done something for you, and they just get miles reported. They submitted miles. They could be a delivery person, could be a pizza place, and they're delivering pizza and they get the miles or whatever reason. So you can either put in a formula that calculates against the IRS rate for miles, or you can calculate it outside of the software and just go ahead and put in the amount that they're owed for miles. So we'll give the person $12.50 for miles. This column right here could be for reimbursements. You can have one column if you like for reimbursements, which would include miles, or you can separate it out for people who want to know the difference, who want to keep track of what they're handing over to employees. So let's say this person went and bought some office supplies for the company, and they bought some pencils, and the pencils cost $4.99. So here's your total of tax-free reimbursements to the employee. So it's all up to the employee to decide if they want to just combine them as one number or itemize them out, so the employee can see on their pay stub that they will actually pay their reimbursement. And here's your net pay, another simple formula. And the net pay, I'll highlight what it's doing. It's your gross minus this deduction, which is your cafeteria plan deductions, minus your taxes, plus, you can't see it here, but it's adding on the $17.49, which is your tax-free unreportable reimbursements. and then you just cut a check to the employee for this amount. But employers also have other responsibilities of paying unemployment tax. So you add a column for your state unemployment and your federal unemployment. For the purpose of this grid, this employer's rate is 2.7%. And there are two different ways of doing this. Some states you get a different rate annually in January. So you can leave this rate here and it'll be effective for the whole year. Some people live in states or operate in states where they change the rate in the middle of the year. So if that's the case, this rate can't stay here for the whole year. So if your rate it doesn't change for the whole year, you leave it here and you can just put the formula in that says multiply the taxable income, which is J4, the taxable income times the rate that you enter here. And when you copy that, when you put the formula in, you put a plus dollar sign in between, so that way when you copy the formula down, it'll continue to use the rate that's here in this box. So it'll just keep moving down. It'll continue to use the rate that's in that box. But if your rate changes in the middle of the year, you have two choices. You can either add another line and change the formula where it'll point to a different box. You can put it, add a space, another line in here somewhere, and add a formula where, you fix this up here and add the rate. There's just multiple ways of doing it. Or you can just make your formula have the rate in the formula like we do here for the state, where you add your rate in the formula. So if your rate changes within the middle of the year, you can just have the rate in the formula. And then whenever you get to wherever it changed, if you still have people subject to that tax, you'll just change the rate in the formula and copy that down. And that goes, FUTA doesn't change. Your FUTA tax pretty much stays the same. And you'll just use the same formula just like you used in the sewer. You put the rate here. So that's how it works. And you'll just do this for every pay period for this person. You'll enter their hours here. You can copy the hourly rate down if the person doesn't, if you're a company that doesn't give a rate change, but once a year and it's the same time every year, you can probably just copy this straight down. So every pay period, you'll just put in the hours that the person worked and it'll calculate. You can also put this in unless it doesn't change. Oh, that shouldn't do that. There we go. So then here are your quarterly amounts for this employee. But all the payroll data is in one tab. All the quarterly data is in one tab. So you put this here so that way you're able to capture your tax deposits for the quarter. You'll add a space down below. That'll capture the year-to-date, which is just adding all the quarters together. This quarter, that quarter, this quarter. That's just the simple formula, adding the quarters together. Then down here, because you have to make tax deposits, you want to have a section for each quarter where it's capturing the same data by quarter. So this tab is nothing more than copying your first quarter total. And then once you do it once, you just copy it across. Well, make sure you fix your formatting if you choose to. So you do it once and then you just copy the formula across. You do it once and you copy the formula across. And that'll take care of everyone. And you do it all now. So you do it for every, there we go. You copy it there and then you would just do it across. And that's how you set up the grid. So everything is for one employee on one tab. And now if you needed to know if this person was paid, let's go to her page here. So here, if you felt like something was wrong, they had a question, you need to go to their page. You see every payroll cycle that has run, what they were paid, their deductions, their cafeteria plan, whatever it is, everything is here. It's there, and the information for each quarter is there, and the person what they've made year to date is also there. If the employee is a salaried employee, you do exactly the same. You use the same grid. You just use the person's salary, and you just wouldn't use these. So you'll just have these shaded, and it's basically the same. The person's, because the person doesn't really get overtime, a salary person may get a bonus or a commission, you would just add a column for whatever pay type that they receive. But everything else is basically the same and the same options. If the person is a higher earner, they will reach their maximum for the unemployment taxes for both state and federal. So you'll be mindful to make sure that when you get close to the maximum amount that's supposed to come out for an employee, that you stop the deduction from, or stop it from calculating somewhere. You might can put in a formula that'll do the if it's over a certain amount, do not calculate. You can put that formula in there. So this is basically for salary. You can color code it, where if someone is a specific color, you know that that's the hourly tab. If it's a blue grid, you know that person is a salary employee. And this is how it looks for Barbara, and this is how it looks for John Doe for the entire year. All the data has been filled in for the entire year. Now let's get to the tab for taxes. So you can set this up whichever way makes sense to you, which looks best for you, whatever. I just color coded so it'd be easy for the eye to see, and I just put it in this format because I felt it was easier to see. But you set it up where if you want everything on the left side to go straight down. I do have data for when I do the monthly depositor at the bottom. So I pre-filled in John Doe and Jane so we can get the data in quickly. The total tax of the first section, the blue section, is for your 941 form, your IRS 941 form. And this is how we're going to collect the data from each employee's tab. And once you do it once, you just copy it down. So the total tax will be the total tax for the 941 form. I'll get to that in a second, which is just a form that's going to add the total tax that you would owe for your 941 form. So you would say the taxable wages for Barbara. So you would hit your equal sign and you would go to Barbara. And this is for the first quarter. And you will go down to the first quarter and you would go to the corresponding column, which is taxable, and you would just hit the equal sign. Once you do that, you just can go straight across, because now it's going to fill in everything from her tab. So Social Security is $379. It'll see when you go straight across, it's just copying the corresponding cells going straight across. What columns that had formula in it already was the total tax and these two. Those are not from the grid, these are formulas. Anyone who fills out a 941 form knows that the employer has a match of whatever comes out of the employee's check. The employer pays an equal amount. So you add these columns just so you can add those in, so you'll know your total tax are these columns. Social Security, Medicare, withholding, employer Social Security, and employee and employer Medicare. This you do not add in because it's just the taxable income. That's one of the lines on the 941 form, so you'll need that amount to know what's taxable. And so this is the total tax that is actually deposited until you file your quarterly form. Same with the state, you hit the equal sign, you go to that employee. You find the corresponding state column, which is here. You hit enter and that number will be there. You do the same. Can't go straight across because these two items do not sit next to each other. So you'll hit the equal sign here. You go to Barbara. You go to the corresponding SUI column for the first quarter. You hit enter. Because these two are right next to each other on the grid, you can just bring it right across. And now once you have the first line filled in, now you can just copy your formulas down. And it'll automatically pull in everything from that grid at the bottom for this employee. Okay, you get the point. So now for your quarterly deposit, this is just, remember, these are just for each employee. So now to make your deposit or have your data for the first quarter, which is a cumulative number for all of these, so now you'll have to add those corresponding boxes for each employee. So quarter one for Barbara, plus quarter one for John, plus quarter one for Jane. Once you've done that once, all you have to do now is copy it. We're just doing the first quarter, so we'll don't need to copy it down, but you get the point. You'll just copy it down and it'll work, calculate for you. It'll bring those numbers in. It'll automatically bring those numbers in for you. As you can see, B5 is B5. And there we go. Did I do it right? Let's see. B6. Yep, here we go. B6 for the second quarter plus B14 for the other person for the second quarter. So you get it. And for this side, this is your actual tax deposits. Oh, you have to do the withholding as well. So for the withholding, you have to, well, this is just for the 941 form. What am I doing? Here we go. I didn't bring it all the way across. Sorry about that. So here's your total tax for the quarter, which includes all 3 employees. This is the actual taxable income for all 3 employees, and you would just put it for however many employees. Most small businesses don't have a lot of employees, so this is really not a lot of work to maintain. Excel is actually doing quite a bit for you, and once you set it up for the first time, there is really not much else you need to do. It'll just automatically do it for you. You can just copy and paste the template to another employee, and it'll bring over everything, and there's really nothing for you to do. You have your formula here because remember you're doing your employer and employee portion. So your formula here is adding your total tax, which will include your employer portion and your employee portion. And you do the same thing for the state. Here we go. You'll say you want to add Barbara plus John plus, whoop, let's go back. I see my mistake, which is great. So make sure we always pay attention. I'm trying to look down at the same time. Here we go. There we go. So it's the same, and then you can just copy formula over and down. We're doing one. You can put all your formulas in at the same time, and as you run your payrolls, they'll automatically fill in, or you can just fill them in as you run your payroll, as you do your quarters. So that's basically it. Your state form, this is your withholding amount. This is your quarterly amount for when you file your quarterly returns. You already know your taxable amount and the amount to deposit, and you don't have to worry about FUTA until the end of the year, which is the first $7,000 of an employee's taxable income. Well, there you have it. So you have a grid for every payroll cycle. So no more going tab to tab to see what you did for someone, to see when the last time they was paid. You can see here, this person skipped a pay cycle. You can easily see that. You just can eyeball it. You don't have to search around. I hope this was very helpful. Please remember to hit the like button and subscribe to my channel so I can bring you more details and information on how little tricks and tips for payroll. And won't always be for just small businesses. It'll be for all size businesses and different types of topics. It could be some tax issues, some medical or dental, how it's treated. It could be Affordable Care Act, different types of issues. So please subscribe and please like. Thank you so much. Have a good day, and thank you for watching.